I think that if we were getting this weak economic data without Trump, right, had Harris won, the dollar would be considerably lower right now. It would be lower than it was when we had the election, because the markets would have factored in this weak data, and they would have assumed that it was going to continue because, Harris would have been a continuation of Biden. So there would be no hope for change, right? Even though the hope we have now is mainly false hope, at least there's hope. But I think gold would be a lot higher. I mean, gold may even be over 3,000 by now if Harris had been elected instead of 2,600, where it's been hanging out this week.
As Donald Trump returns to the White House, his proposed tariffs and protectionist policies are expected to fuel trade conflicts, which could boost gold's appeal as a safe haven asset. Senior analyst Peter Schiff believes that if Harris had won instead of Trump, the dollar would likely have been significantly weaker due to ongoing weak economic data, and gold could have already surged past $3,000. Currently, however, gold hovers around the $2,600 mark. The gold market continues to face challenges as U.S. interest rates remain elevated, putting pressure on prices. Liquidity concerns have also contributed to the market's volatility. At present, gold is approaching a critical support area that needs to be held back for the market to regain strength. Many analysts predict that gold prices will remain in a tug-of-war between rising bond yields and safe haven demand, driven by growing geopolitical and economic uncertainty. Despite headwinds, gold's 28% rally in 2024 has sparked optimism, with analysts forecasting that strong central bank buying could drive prices toward $3,000 by mid-2025. Peter Schiff also points out that although gold stocks have declined recently, they performed well before the election. He believes the recent drop is a temporary reaction, as a Trump presidency, much like his first term, could be bullish for gold. Trump's return to the White House is expected to escalate trade tensions, particularly with China and the BRICS nations, further intensifying geopolitical risks. While the U.S. dollar is likely to remain strong, analysts predict that gold may not replicate its recent performance in 2025. However, it could still offer better returns amid ongoing market uncertainty. Before we dive deep into this video, make sure to subscribe to our channel and hit the bell icon so you never miss any of our updates.
Gold stocks did get hit again, down maybe 1.5%. I have a feeling there's probably some tax loss selling in those names, because we did get a big drop in gold stocks in the last month or so since the election. And since so many other stocks are up, maybe some people own some tech stocks that they sold and they wanted to offset the gains, and so they sold the gold stock. There are not that many stocks that were probably down, and the gold stocks were having a great year up until the election. Again, I think this is a head fake. I don't think the Trump presidency is bearish for gold. In fact, I think it's going to be bullish for gold. Not that a Harris presidency wouldn't have been bullish. That would have been bullish too. But I think Trump is also going to be positive for gold. In fact, gold did very well during Trump's first term. I think it was up about 40-50%. I think it'll have a bigger move during his second term. All right, so I want to go over some of the weak economic data, again, that came out during the week, and nobody cares. I mean, part of the reason, I guess, that nobody cares is they assume that it doesn't matter, right? Because all these numbers are Biden's numbers, and as soon as Trump gets in there, it's all going to turn around. But it seems that most of the people in the financial media, and certainly the mainstream media, are still claiming that everything is great, that Biden is handing Trump a pristine economy. Remarkable was the word that Jerome Powell used to describe this economy, right? It's remarkable. And I think, again, they're setting Trump up, because when the economy turns south, or it's actually already south, they just pretend it's north, but when they're forced to admit the economy is in recession, they're going to claim that Trump broke it, that everything was great. And look how quickly Trump ruined an awesome economy. It was remarkable, and he managed to wreck it in a matter of months. That's how bad Trump is. That's how damaging his policies are, that they created a recession before they were even, enacted, right? So that's what's coming, but they're still ignoring all of this. I think that if we were getting this weak economic data without Trump, right, had Harris won, the dollar would be considerably lower right now. It would be lower than it was when we had the election, because the markets would have factored in this weak data, and they would have assumed that it was going to continue, because Harris would have been a continuation of Biden. So there would be no hope for change, right? Even though the hope we have now is mainly false hope, at least there's hope. But I think gold would be a lot higher. I mean, gold may even be over 3,000 by now if Harris had been elected instead of 2,600 where it's been hanging out recent this week.
Consumers continue to rank inflation as one of their top economic concerns, with many still feeling the impact of the price surge during the pandemic. Although the U.S. inflation rate has now eased closer to the Federal Reserve's 2% target, many Americans perceive inflation as high because prices have not decreased. Instead, they are increasing at a slower pace than during the pandemic. Economists warn that Donald Trump's proposed policies could reignite inflation. His plans for new tariffs would effectively act as sales taxes, passed on to American consumers rather than the countries exporting goods to the U.S. Additionally, Trump's proposal to deport millions of immigrants could further drive inflation, as employers would likely face rising labor costs due to a worker shortage. Peter Schiff, a prominent economic analyst, echoes these concerns. He argues that while spending might increase under Trump's policies, the underlying economy will weaken due to declining manufacturing output and widening trade deficits. This combination of factors will likely result in higher inflation without the economic growth necessary to justify further interest rate hikes by the Federal Reserve. For the gold market, this scenario could be significant. Historically, gold has thrived in environments where inflation rises and economic uncertainty grows. Let's get back to the video.
I think they've got it half right. It's not going to be a strong economy. It's going to be a weak economy. The economy is going to be weaker. Yes, we're going to be spending more. There's no question people will spend more, right? If we have increased government spending, if we have tax cuts, we're going to spend more, but we're not going to be producing more. The trends in manufacturing are going to continue. The trade deficits are going to get bigger and bigger. And so the real economy is going to be getting weaker, just like it's been in the past. What's going to strengthen is inflation. So it's not going to be that we have this booming economy and the Fed might hike. It's going to be that we don't have a booming economy, but the Fed might have to hike anyway because we have a resurgence in inflation. And in fact, it's very possible that even before we have a chance to get the tax cuts, that we officially go into recession. We could see a big move up in the unemployment rate. Now, the real question is, will Powell ease? Will he continue to cut rates to try to prop up the economy, even if inflation is headed in the other direction? Because nobody is talking about that possibility. Everybody just assumes that it's one or the other. That if we have a weak economy, well, then we don't have to worry about inflation. And if we have so the only way we have to worry about inflation is if the economy is stronger than expected. And people think that's still a problem. But what they're overlooking is the much bigger problem if we get stronger inflation and a weaker economy at the same time. And the reason that's the worst possible problem is, of course, it's the one the Fed has no contingency plan, right? They admitted that. All they can do is hope it doesn't happen, because if it does happen, they're screwed. And of course, if they're screwed, the country is screwed, because there's nothing that they can do when they have a problem with both of their mandates at the same time. They like to say, look, we're trying to get full employment and stable prices, which they've redefined. In fact, I even heard Powell at a recent, his recent Q&A say that, Congress has given us these mandates for 2% inflation. Congress never gave the Fed a mandate for 2% inflation. The mandate is for stable prices. 2% inflation is BS. That's not stable prices. That's prices going up 2% a year. What's stable about that? Stable means they're unchanged. That's price stability. If Congress wanted 2% inflation, they would have put that in there. The Fed came up with 2% all by itself. It decided to define price stability as 2% inflation. So if it could define it as 2%, it could define it as 3% or 4%, whatever the hell it was. But that's not what it's supposed to do. But anyway, if it has this one mandate for 2% inflation, and then it has full employment, and it always wants to see, right now the unemployment rate is really low. And of course, it's only really low because of the way they calculate it. And the only reason inflation is low is because the way they calculate. If they calculated inflation and unemployment honestly, the Fed would be failing on both mandates. You would see that unemployment is actually very high right now, historically high, and so is inflation. And so the Fed is a two-time failure. Instead, the Fed pretends that they've succeeded because they've rigged the game. But despite the fact that they rigged everything, unemployment and inflation can still be so bad that they can't hide it, right, between these numbers. And so once they get a spike in unemployment and a spike in inflation, that happen at the same time, they got nothing, and they have to make a choice. They're caught between a rock and a hard place. And when you hear people saying that, oh, it's very rare to have recession and inflation at the same time, it's not rare. It happens all over the world. It just hasn't really happened in the U.S. in a big way since the 1970s. And part of the reason is because we've changed the way we measure it. If we measured it correctly, we would have seen that we've had stagflation for a while in this country.
While the U.S. dollar may remain resilient, precious metals like gold are expected to benefit from increased demand as safe haven assets. Investors should closely monitor the balance between inflationary pressures and central bank policies, which could significantly influence market dynamics in the coming years. How do you think these factors will impact your investment strategy going forward? Let us know your thoughts in the comments below. We'd love to hear your take on it. If you enjoyed this video and found it informative, make sure to like, subscribe, and hit the bell icon to stay updated on all our latest content. Thanks for watching, and see you in the next video.